Welcome to AGORACOM, the Small Cap Epicenter, and AGORACOM TV, a daily, fast-paced, edgy show, bringing the best press release out of the small cap space every morning at the open, so you'll hopefully profit from them and maybe find your next great small cap investment. It's Thursday, November the 4th, count them, 7 press releases for you, a lot of financial results, drilling results. Let's get straight to them. First up, China Integrated Energy trades on the NASDAQ under CBEH. They announced their third quarter numbers, and they've increased their full year 2010 revenue and net income guidance. This is a non-state-owned integrated energy company out of the People's Republic of China, as you probably guessed. Here are some of the highlights. Revenue, $107 million, increased by 47.5% over the same quarter last year. Gross profit, $16 million, that's up 47.5%. Net income, $13.7 million. That's up 39%. Big numbers, big growth, top and bottom line. Let's look at the balance sheet. Cash and cash equivalents, just under $80 million as of September 30th. I like their current ratio, 8.2 to 1. That's assets over debt. Net cash from operations, $35.5 million for the first 9 months. That compares to $19 million for the first 9 months last year. Finally, management has provided an outlook here. They expect to report sales of $435 million and net income of $53.5 million for the full year ended December 31st, 2010. That's a home run press release. I can't talk about the valuation. They closed yesterday at $932, in between their 52-week rating range of $1231 on the high and $560 on the low. You're going to have to do your due diligence on that one. But these kind of numbers, great numbers. Congratulations to China Integrated Energy. Next up, Richemont Mine trades on the big board TSX-RIC, and for our friends in the U.S. on the AMEX under RIC as well. They're reporting financial and operational results for the third quarter ended September 30th. Here are the highlights. Revenue growth of 25% compared to revenue in Q3 2009. Gold sales, 18,000 ounces. I'm rounding down slightly here. 18,000 ounces at $1,244 US per ounce. Do the math, big number there. Net earnings, $2.5 million or 8 cents per share. That compares to 1 cent per share for Q3 last year. Big growth there. Year-to-date net earnings, $4.5 million, 16 cents per share versus a share for the same 9-month period last year. So they're growing all over the place. Finally, $40.6 million in working capital, no hedging contracts, no long-term debt, so they're looking strong. The company says they produced about 1 million ounces of gold from their operations in Quebec, Ontario, and Newfoundland since 1991. Closed yesterday, 470, dead smack in the middle of its 52-week range, 560 on the high, 343 on the low. Great news out of Richmont. Next up, Avion Gold Corporation, Venture Exchange, AVR, and for our friends in the U.S., OTCQX. AVGCF, and that's a great service to be on OTCQX. They definitely separate the wheat from the chaff here. The company announces October 2010 monthly production of approximately 9,120 ounces of gold, and the story doesn't stop there. I'll give you more in a bit. These are from their operations in Mali, West Africa. Great place to be, especially as of date. Year-to-date gold production, approximately 70,633 ounces. Big numbers there. In addition, management expects to exceed the fourth quarter production target of 20,000 ounces of gold. Big jump there when you factor in the fact that third quarter was just 9,123 ounces, so they're more than doubling it, and they expect to finish the year at the upper end of their production guidance of 75 to 85,000 ounces of gold. I like it when a company delivers results and when they've given guidance and they know they're going to meet the upper end of that guidance. It bodes well for a good management team there. They say that they hold 80% of the Tabacado and Sagala gold projects in Mali, where this production came from. Gold production commenced at these projects in 2009 with just over 51,000 ounces produced. 2010 production, as we said, estimated 75 to 85,000 ounces. I put that in there because I want to show you they've grown production by 50% in just 1 year. So that's a great number. Closed yesterday, 86 cents. Seems cheap, but it looks like a market cap of about $300 million and change. So it may not be cheap. Do your due diligence. 52-week high, 91 cents. 52-week low, 33 cents. Nonetheless, great numbers, and especially with gold being up $40 an ounce this morning, those numbers are going to jump significantly. It only helps producers like Avion, so good news out of them. Let's go on to Spanish Mountain Gold, trades on the venture under SPA. They provide an update, assay results, and an update on their preliminary economic assessment. We always like that. The Spanish Mountain Gold Project is in southern central British Columbia. 20 holes were drilled. All exploration holes intersected gold mineralization that confirm or extend known mineralization. Here are some of the highlights. 26.5 meters grading 1.8 grams per ton of gold, including 2.5 meters of 5.06 grams per ton. You've got 29 meters grading 1.2 grams per ton, 119.5 meters grading 0.74 grams per ton, and some other great intersections there. Go take a look at this press release. Some nice numbers out of this. The company says they've got no debt and they own 100% of all 4 gold properties located in British Columbia. Closed yesterday 68 cents. 52-week high 76, 52-week low 22.5 cents. Next up, Continental Nickel trades on the venture under CNI. They're reporting additional assay results. This from their nickel sulfide project in Tanzania, including 1.14% nickel and 0.25% copper over 11.5 meters. This is from their recently completed Phase 1 diamond drilling program. The project is a 75-25 joint venture with some companies out of Australia. Highlights include 0.91% nickel and 0.2% copper over 17 meters, including 2.3 meters grading 2.5% nickel and 0.34% copper. So some decent numbers there. Hole 207 seems to be their highlight hole. Go take a look at that press release. The company's key asset is this project where they have a 75% interest that has an NI 43-101 mineral resources, have defined 40,000 tons of contained nickel. Ongoing exploration is going on to evaluate the potential to expand. I like it when I see a company have NI 43-101 numbers to it, and that's why they're covered here on AGORACOM TV. Closed yesterday 60 cents. Again, dead smack in the middle of its 52-week trading range. 92 cents on the high, 34 cents on the low. Good news out of them. Getting back to our U.S. friends and some more results. I want to stick to the energy and resources sector for obvious reasons. We got DDS Wireless, trades in the stock symbol DD on the big board, Toronto Stock Exchange. They provide wireless data solutions for fleet management. They've been doing it for 20 years. I like this space a lot. I think it's only going to get bigger years and years to come. Here are the company's Q3 highlights. Revenue up 17% to $9.7 million. Love that number. Gross margins up to increase to 52% from 43%. So that shows me some good pricing. Either they've got their pricing power or they've got their costs under control. I would think that's pricing power, and that's a very, very good sign when a company can actually increase margins in this environment. For the 3 months ended September 30th, net income was $600,000. That translates to about 5 cents per share compared to a net loss of $1.1 million or loss of 8 cents per share for the same quarter last year. So they've got some great year-over-year growth there. They provided a business outlook. They're maintaining their previously issued revenue guidance of $40 to $41 million for the year ending December 30th, and translates to year-over-year growth of between 12 and 15%. So great top line, great bottom line, very well done by DDS. Closed yesterday at $1.35, $1.80 on the 52-week high, $1.23 on the 52-week low. And finally, we got American Shared Hospital Services, AMS on the MX. This is a provider of turnkey technology solutions for advanced radiosurgical and radiation therapy services. Here I got the third quarter and the 9-month results. I'm going to give you the 9-month numbers. Revenue, $12.5 million. That compares to about 12.6 last year, so kind of flat. Net income, this is where the company's a little bit weak, $17,000. That's pretty low. You might as well call it break even on especially when it comes to doing $12.5 million in revenue. That compares to a net loss last year of $51,000, so not a big swing there by any means. However, what I do like is this. Cash and cash equivalents, just over $10 million. Shareholders' equity, $23 million or $5 per share. That's important because the company's trading at $2.94 as of yesterday. So I don't see a lot of bottom line growth coming out of here. It's pretty evident that year over year they're not able to turn a big net income number, but they are generating significant amounts of cash, and that tells me that if anything, this company may be a buyout prospect going forward by a bigger medical company. So that's where you're probably going to get your gains, if anywhere. That $2.94 number, again, dead smack in the middle of their 52-week, $370 on the high, $228 on the low. One stock halt for you. Renaissance Gold, REN on the venture, halted at 9 o'clock this morning, pending news. That's a wrap. Have a great day. See you tomorrow.